All right, let's get going. It is Thursday, the 13th of March, 2025. Income Navigator live trading session. Like I said, if you do have any questions, you can pop them in chat. If it's constructive and something we can cover, beautiful. That'll be great. We'll cover any of that stuff. If not, I'm going to jump into some trades here and some charts, and we'll get a sense of where the market is and what we can be putting on right now. And there's definitely a bunch of trade opportunities, I think, but we'll see what happens with the markets, and it depends on your, of course, your portfolio, what you can do. All right, let's get in. I'll share. I'll get off video. Reduce down. All right, we are good to go. I'll get chat up. Quiet group today. All right, let's get going. All right, we'll start with ES. Here, what do we see? Well, the weekly trend has obviously been down and accelerating to the downside. So the candles continue to get bigger and bigger and bigger each week. It's been a pretty steep 4 week sell-off for the markets, which is no bueno. Uh, but as long as you adhere to your plan and you're pretty well set up properly, it should not be a major problem. It's going to give us some pressure on our net lick, but while I've stopped out of a couple trades, nothing terrible here. So it is what it is. And if you look at this market from top to, really the bottom, which a couple days ago, we're down 10% in the S&P right now. So a 10% drop in the S&P in 4 weeks, that's a pretty substantial drop. So you get 10% pullbacks once or twice a year on average. The key here is you don't typically get them this fast. It's a pretty fast accelerated drop. So if you did well in this drop or you're just hanging in there, you're going to take some pressure on your net lick, which is fine. Okay. But most of our trades are in pretty good shape. Again, we did have to stop out, but again, you don't have 10% drops in 3 to 4 weeks as the norm. So I think overall, we've weathered this pretty good. Now, I brought this up yesterday in one of the videos that we did. But if you're looking at the daily, which is the right-hand side of this chart, if we're looking at the daily info here, this yellow downtrend line that we see here, and it's not exact, but we'll keep it along somewhere along this line. This downtrend line here is still intact, which means you've got a sharp sell-off until we break this line and then maybe even come down and retest that line. We're not going to be overly bullish in the short term here. If you're looking at the weekly chart, it's still a pretty good uptrend. It's a nice pullback, certainly breaking the 21, breaking the 50, not great, but in the scheme of things, okay, it's still a fairly decent uptrend. Now, we really haven't had a chance to create more lower lows and lower highs yet because there's been no lower high. It's only been just lower lows right now. So we'll keep an eye on where things are, but pretty good resistance level up at the top here. I don't really expect us to test that resistance up here. So I think if you want to sell anything above the 6,100 level, 6,160, if we get a decent bounce that comes up to this trend line or the 21 or even the 50, I will be doing call credit spreads up here since I think they'll be fairly decent setups. I just don't see a reason for the markets to rally to new highs, not with all of the tariff war talk that's going on right now, despite the fact that inflation's coming down, which is a great sign. Oil's dropping, which is a great sign for inflation. Everything that we would expect to happen here on the inflation front, well, that's all happening, and the market should be rebounding from that. But it's the tariff uncertainty and just the lack of clarity, I think, on the tariffs that are really causing some potential concerns out there. Anyway, I'm not going to get political at all on it, just giving the take on it. I still think down here at this 5,300 could be a spot to look at for some support. Do I think we can go down there? Yeah, I mean, right now, I think that's a definite possibility. The one thing that's still on the daily side here that's making me, still more nervous is that this is the 50 in, purple or fuchsia or whatever color here. This is the 21 EMA in green. Well, the 21, not only did it cross through the 50, so that was a pretty good bearish sign back here. It just keeps widening that gap. The gap between the 21 and the 50 is now as wide as it's been, and I don't know, we can't even find too many times where on the downside, uh, it was a whole lot wider. On the upside, we've had a couple in here. If we wanted to measure, this is probably about as wide as it's been from about here to here, which is, about 90 points wide. Okay. And when it gets super wide on the upside, that's an area for concern. Okay. And when it gets super wide on the downside, I think that's an area where, okay, now you might find some sort of a bottom. But as long as we continue to widen, it'll be alarming until that stops. And right now we are at, what is this? About a 95. So we're about as wide to the downside on that as we have been to the upside. And when the upside gets that wide and then starts to pinch in, well, that usually signals that we're just going to run out of steam to the upside, which gives us, again, new trade ideas. Well, to the downside, the same thing's going to happen. All right. So any bounce here, I would just treat as a bear market, at least the short-term bear market correction territory bounce. And it's no reason for me to get long. So there's zero reason to be putting on long trades except to maybe scale in a little bit on maybe some QQQ or SPY or something like that. If you wanted to add here, down 10%, not the worst to add a little bit. And if we go down 15, maybe add a little bit more. And if we get down 20, then I would potentially be going in a lot more. Three things I look for is what's the PSAR doing? Well, right now, the dots, they're dropping and they're getting wider, which means the acceleration to the downside was pretty heavy, except for today. This width between yesterday and today on the PSAR dots is less than yesterday and the day before, which means we could be coming to a little bit of a temporary bottom or a bounce. But PSAR is bearish. That's number one. The downtrend line is still intact. That's number two. And then if we're looking at the distance between the 21 and the 50, it's widening and they're both heading down. Okay, that's number three. So really all of those things are telling you that the market's heading down, which is, I don't think you need to be a genius to know that. But I'm not seeing anywhere here to start to enter a lot of long trades. But I think spec type trades like an at the money 111, still a really, really good trader, a Jade Lizard. I think these are decent trades. Can't do strangles in here. We don't have any reason to do that at this time. But also the RSI is oversold now. That is your saving grace, is that it's oversold. Doesn't mean it can't stay that way, but I don't have a lot of trades in ES that I would be doing right now. I certainly don't want to put on anything bullish. All right, so I think that's enough on that. Let's get into oil here. Oil, if we're looking at the oil trade, okay. Now PSAR did flip bullish yesterday. Okay, so that's a nice, let's see if I can get it so you can see it easier. Yesterday, PSAR flipped bullish, and today, so oil, it's in a downtrend. The trend line is still lower, but we're getting close to it, but we're still bearish there. PSAR flipped, so now we got a little bit of a mixed market, and RSI has been trying to head up, and stochastic momentum has been heading up from oversold. Not saying it's the lows are in, but I think this is giving you enough movement here to make some decisions. If you're looking at the weekly downtrend line, 21 falling below the 50, bearish PSAR that's not going to flip anytime soon, like no time soon. And then RSI still falling. The longer term time frame on oil still not great. Just like in ES, the longer term time frame still not great, not showing any type of a bottom. You've got bearish PSAR, you've got MACD falling, RSI falling. None of these are oversold. Yet you're just breaking the 50 with the 21 heading down. This could this could indicate that there's a lot more potential pain from the longer term standpoint, even though short term could get a little bit of a bounce and might be slowing here. Oil, though, it's still the same. The longer term, no bueno. Doesn't look good. So, what would I be doing in here on oil? So, first off, we've already talked about ES, which to me is bearish, which means I don't want to do anything bullish, but I think maybe an at the money 111 or maybe a J lizard here. And on any bounce, I would be looking at potentially like call credit spreads for short-term trades. On oil here, kind of the same type of a thing, except a little bit better of a bounce. In this, I think strangles are still a possibility in here. So I think an oil strangle is not bad. I think any kind of a 112 trade in oil here is not bad. I don't want to have any risk to the upside. And I think you could also go with some sort of a jade lizard in oil if you want. We can take a look at some of those trade ideas for you. But on oil, still, if you're looking at the 50, and I know there's a lot of lines on here, so let's look at at least one of these anchored VWAPs off of this. There's so much overhead resistance right now. You've got to break the downtrend, the 21, the 50, the anchored VWAP, and the 21 just to get into the low 70s here. So much overhead resistance on oil. I just don't see a huge bounce anytime soon. I think just sideways to lower drift is possible. If you think we're heading into a potential recession, again, trade what you see. You're not seeing that necessarily yet, but if the weekly continues to get worse on ES, the SPY, the Qs, then yeah, I think those are a real possibility. But if we're trading oil, Strangles, 112, Jade Lizards, all really good trades here. I don't think I would be doing anything with like a put credit spread or anything here at this time. But if we either going to move out but with of the downtrend with either a rally, or B, just time. We're just going to move sideways and start to establish a nice base, which is maybe what's happening. Plenty of trades there. All right, gold. Today is the breakout on gold. We've been looking at gold. We've been talking about this value area that we've been in for quite some time. This is now 5 weeks in this value area. Yeah, we've been to the top, we've been to the bottom, we've been to the top, we've been to the bottom. We broke it for a day. We came back in the middle here, came back down, touched the bottom. It's just been a perfect setup on gold to just watch what's going on. So what's the gold trend? Well, the trend is up. Okay, so you've got an upward trend. You've got the primary trend here that you can see on the weekly. So you've got a primary trend, and then you have a secondary trend here as well. So you've got a primary trend and then a even sharper secondary trend that we're moving up on. I don't know if I can solve it a little bit, make it a little cleaner here. I don't know if I can get these. There you go. That's exactly what I wanted. All right. But today you're breaking out. Now you're hitting the top of the Bollinger Band. Even though we broke it here for one day, we came right back in. Is that going to happen? I don't know. Here's a good example of the 21 getting farther from the 50 and starting to curl back in. Good opportunity here that, okay, maybe this trend is slowing down a bit, and it did. It meandered sideways here for a week or two, okay, and now it's starting to get itself going again. So the gold trade, I think, is definitely on here. I think that you don't want to necessarily just go all in today on this break. Let's see if we continue this move more to the upside, if we get anything that pulls back in here and then gets going longer. The thing that makes me nervous is volume has been dropping on a couple of these candles. Not today, the volume could actually be better. MACD is rising, RSI is rising, stochastic momentum is rising, but we are getting oversold. I just don't know how much upside gold has. I don't want to have any risk to the upside, so I think things like uh, I think things like potentially a 112s just don't set up well, but maybe a Jade Lizard, something that gives me a little room to the upside, no risk to the upside. And then if we pull back a little bit, I think that works well. I think Jade Lizard's set up decently on gold. We can certainly take a look at that and see. I don't know that 112 is actually set up. It would be perfect for a 112. I don't think it sets up great. So I think Jade Lizard, a good opportunity here now. Certainly not a strangle at a gold. Here. Would I own physical gold or silver? I mean, I typically don't. Um, I mean, I really can't give you that kind of advice here, but I don't. I think for the next year, gold's in good shape. After that, I have no idea. So would I buy it and own it? I don't really know. You would be buying it at the top at all-time highs. I think the time to buy gold was on dips, not at all-time highs. I just don't think it makes sense to buy anything long term at all time highs. Now, every long time, every all time high was was a beat of a previous all time high. So you can argue that, well, it's an all time high here. There'll be another one down the road. Well, maybe there will be because there's no such thing as an all time high that didn't happen on a previous all time high. However, at some point, this thing might top out, move sideways. I think gold's a good asset. I think it's something that I think is tradable. I think there's long-term opportunities in here. Would I buy physical? Man, I don't know. Would I? I don't know, David, what the CCS is that based on 6A, 6E? Is that on gold? I don't know which one you're referring to here. If you're asking, would I do a CCS on gold? Well, not right now. Not today, I wouldn't, uh, because you're not over you're not oversold or overbought. I mean. Right? It's not overbought, even though you're at the Bollinger Band. Okay? Now we've seen it ride the Bollinger Band higher, and the Bollinger Band's starting to curl up. Okay? We haven't really broken it substantially, so I think you can definitely move up more on gold. I think the 3 ATR band here is something to keep an eye on. I think gold can go up. It looks like it's powering higher, but I think it could be getting oversold. I just don't have a lot to tell you on gold. Jade lizards would be my thing. I just don't want to have any. I want to have no risk to the upside on any trades. I don't think it crashes. I think it could move sideways, what have you, which I think is perfect for like an at the money 111, jade lizards, things like that. All right, but I certainly want to short it or something with like a call credit spread. In there. We can look at silver in a minute or so. All right, bonds. Bonds have had this nice pullback. Now, bonds are in the uptrend, so the longer term uptrend still intact. On it, the 21's above the 50. We are starting to cut the distance between those. I think you're going to start seeing more leaning towards the Fed cutting rates 2 to 3 times this year now. Originally, it was, you know, a month or so ago, there was going to be one cut at the end of the year, maybe. Now I think you're looking at 3 cuts, and I think you're looking at them sooner than later, depending on how the markets are reacting. But with inflation, the CCI and the PPI, or CPI and PPI, those were pretty benign. That showed inflation's not really run away to the upside here. I think that's a good sign for the Fed potentially cutting. And I think you continue to see bond rates dropping. I know this is a lot of stuff here, but if we look at the 10-year note, I mean, this thing has been coming well off its highs. I mean, it was way up here at 480. It has dropped all the way down to about 412. It's coming up a little bit off of that, but bond rates, looking at the weekly chart here, they've just been coming off their highs. I don't see a reason for them to really skyrocket, which means I don't know if they're going to, I think they can fall to stay stagnant. I still love stuff like TLT and bonds here, I still love these for the strangle potential. I just think these are such good strangle opportunities in bonds. But I would also even potentially look at things like selling naked puts on these. I think you could sell naked puts on gold as well. Uh, Even though you're at the high, I would just like a little bit of a pullback. All right. So there we are on bonds. I think strangles. And then on this pullback here, I think selling naked puts down here about this 112 level or below is not the worst thing in the world. Even a put credit spread, if you're a little strapped on cash here, not a bad idea. All right, let's keep going. Copper's definitely on a tear as well, breaking through. Okay, and this is what I'm looking for on gold. You tapped on it, you tapped on it, you broke it, came back down on it, tapped on it, and then now potentially you could be off to the races a little bit on this. The uptrend line still pretty well intact. Nice ascending triangle pattern here. We are getting close to overbought territory on copper as well. But it was a good opportunity here on this break to get long yesterday. Uh, You might get a little bit continue some continued pop here. It just doesn't set up as the best opportunity. Silver, same exact thing as gold. I mean, there's nothing different in silver except that it's just more of a trading range. Look at the weekly here. Silver has been in the same range essentially, okay, give or take a little bit of time. Oops, I don't know why that happened. Okay, if you look at this, maybe we go up here a little bit. Okay, to catch most of the move. I mean, silver's been in this trading range. It's been a great strangle opportunity for quite a while. It's now starting, like gold, it's now starting to break out of its ranges to the upside. Strong move higher in silver. You either can decide you want to chase it here. To me, it's just chasing it uh, on it. And again, would you buy it long term? Would you own silver? I would probably never own silver. Uh, just me personally, I just don't think it's got the same potential as gold. But man, I just think buying at all-time highs is not the best move. Why not buy down at these, prices at the bottom of these ranges when you hit the 50-day? That's when you buy stuff for the long term. Or when stuff hits the 200-day, like it did back here. I mean, that's where you buy stuff for the long term. The 200-day moving average, to me, is where you want to get in on stuff for the long term, not when you've broken way out and you're at the top of the Bollinger Band. All right, let's take a quick run through things. RTY looks just absolutely terrible in here. This range no longer matters. We broke to the downside. I just don't see anything good coming from this. So far below the 200. Is it probably of decent value? It might. I just don't know the catalyst for this, except maybe falling rates. But I think tariffs are going to murder small companies. So I think small caps stay down. The Aussie dollar. This is what makes me a little nervous. If you want to do something in here, is that this is a pretty definite symmetrical triangle pattern. And while I think it's a really great strangle setup, you could get a pretty good move one way or the other. Here with the US dollar struggling a bit. So if we look at the US dollar has just gotten the daylight's beat out of it for a couple weeks now, or actually a couple months now. The dollar has weakened, which has certainly helped some of these Forex currencies in here, but they really haven't climbed as much as the dollar has fallen. I think it's a strangle opportunity. I think there's nothing wrong with strangling this in here right now. If I was looking at this, I'd think a strangle would be an opportunity here. 6E as well, is off to the races. This is working more with the U.S. dollar than the Aussie dollar is, but I don't see a trade in here right now. It's to me, it's overextended to the upside. If I was going to do anything, I would probably do a call credit spread, but there's no trade on this thing. on it right now, in my opinion. I just don't think there's a lot of great things that are happening. Let's look really quickly. We'll take a look at SPY and QQQ. And the couple quick things here. Again, primary trend line way up here, secondary trend line down here. We're trying to break through this thing to the downside. Uh, Maybe it'll happen here, and maybe we can get a little bit of a bounce. You've got a flatlined stochastic momentum, so this thing is not moving much at all, except drifting lower with RSI. I think you're overextended. I don't know that it's over yet, but I think you're definitely overextended. You're below the 200 day. If you wanted to get long, I mean, I think that the 200 day makes some sense. Okay. If you wanted to get long, you broke it. Uh, it should mean revert back to it. And if you're looking at the weekly over here, you're still well above the weekly 200. We could still come down a little bit more on these, but I wouldn't be afraid to nibble in a little here. And if we looked at the Qs, you're going to try to break the downtrend. So we're getting closer, getting closer. Uh, Still, there's not an all clear to buy. RSI is not really climbing. MACD is starting to reverse. So let's give it another day or so and see if that 2150 starts to slow down the widening here. And then we've got the PSAR, which is slowing down the drop as well. The gaps are getting smaller here. I think if we touch that and we can flip it, that'll be good. I think that's still days away from that happening. I would not catch the falling knife here. Let's just let it play out. Why rush in on the Qs right now? Okay, just keep your powder dry. We're going to have opportunities. We're not going to miss the world's greatest rally in here. And then really quickly, I want to get moving on some other things here. Really quickly, if we're looking at Amazon, I like Amazon. I talked about this yesterday in my nightly video. Everything's bearish right now. So why would you buy? Because you're telling us to hold off on everything else. Well, this one did flip PSAR to bullish here. You are seeing MACD starting to make its move to the upside. We're finally getting the weekly towards the oversold territories, but my valuation, based on my calculations on Amazon, is between 190 and 200 is its intrinsic value. If I believe Amazon is, let's take the high case. If I believe Amazon's worth even 190 at the worst case here, and we're sitting at 195, I wouldn't be opposed to selling puts on Amazon leaps at this price. Can it fall further? It sure could, but I think the value of the company is 190 at the worst, 200 at the most. Okay? You're dead center of that. I think it's well valued here for an opportunity. So let's just wait and see uh, on it. But I think if you're below the 200-day moving average here, it's something to keep an eye on. Oops. And then the anchored VWAP here from back on the lows, we've got to break through that. So there's some overhead resistance here. You've got a lot of stuff to chunk through. It's not going to turn around in a day. So I don't think you have to rush in. I just think it's not a bad opportunity on any further drops on Amazon. I think you're getting pretty good deals. I think Meta is getting close to giving you a deal as well. Intrinsic value, I don't have it handy, but I think if you liked Meta, I mean, you've had a massive pullback from the highs. So you've had a nice 20% pullback on Meta. So if you liked it, you got a 20% pullback. That doesn't happen often. You are, at not at the 200-day yet, but you're getting close. So I'll keep an eye on. NVIDIA, which is up today, I like it in here. I think the intrinsic value is down here in the 108 range. But I think overall it's not a bad looking chart. And you're starting to see MACD is really reversing, RSI is running higher, stochastic momentum's getting going on the daily. Uh, I think I think this is not a bad spot to take a look at some things here on NVIDIA. I'm not telling you to pour your life savings into these, but I think it's an opportunity on NVIDIA. Tesla, I'm still concerned about Tesla overall, but I think it's in a good spot here to add a little bit. I'm not adding any more to mine, but I do own it, and I'm not getting rid of it in this range. Uh, I think Elon's got some challenges with what he's doing, and the company getting a black eye because of him a little bit right now from people. Whether you think they're staged protests or not, it's just not good to have all of that negative publicity about your company. Tesla's going to have to come out with something important and newsworthy and helpful soon. All right, that's it. And then I'll just touch base on two more. Google here. Uh, I like it here. I think this is not a bad spot for Google either. The all clear is not sounded. PSAR still bearish. I'm not touching it. And then Palantir here, I still think the value of this thing's like 30 to 40. It's way overvalued, but I think this was an opportunity to sell naked puts. If it goes further down, then I think that's an opportunity to buy. So selling naked puts on big pullbacks is preferable to me in my longer term portfolio than the others. All right. So that's it. I think we covered probably a lot of different things in here. AMD still just not doing well, but maybe finding some sort of a base in here. A lot of these stocks are starting to put in a little bit of a base. Doesn't mean they can't go lower, but that's individual stocks. And if you take a look at some of these sectors, where what sectors look halfway decent right now? Well, consumer discretionary, that's Tesla and Amazon, struggling because of Tesla more than anything right now. Not time to buy. Communication, this is your Google and Meta are in this one. Not a good time to get in. Energy, not bad looking. I would be looking at potential energy plays out there right now. So I think some potential energy plays. This chart's not terrible. It's defensive in nature as well. Financials, I think you can start to look for deals in financials. JP Morgan and others, I think you can start to look, and regional banks. If we look at the regionals here, I think regional banks here, not the worst thing to start to look in here. And then healthcare, I'm sorry, pharmaceuticals, doesn't look great yet. And XLV is healthcare. Uh, Pretty overdone here. Not done. I'm not jumping back in on any of these things. All right, really quick, GEV. Okay, so this thing has had such a meteoric rise. Good company. I like it. Down here, you don't get opportunities to buy the 200-day moving average on what you consider a good quality company. Okay? This is in my secondary stock list here. It's not one of my primaries, so I don't trade it or won't trade it. But I don't think it's the worst spot to enter GEV here, down here. I don't know that you have to rush into it, but I don't think it's bad in here. Nice pullback and holding on solidly here while the market kind of moves sideways. I don't think that's bad. Celsius also doesn't look too shabby in here. This thing's had a nice little bit of a move. And then I think Boeing in here is not a bad spot. Okay. They've got so many problems, but I think the new guy will get everything turned around on Boeing. I don't think you have to rush into it yet, but I don't think this is the worst spot below the 200-day to get into Boeing. Okay. All right. So there you go. Handful of stocks. I think Taiwan Semiconductor, I don't think tariffs are going to affect this company. I don't think they're going to put tariffs on bringing in stuff that the U.S. needs to build their chips. So I think Taiwan will do pretty good. I don't think they're a target of this administration right now. Yeah, they're at a low. I don't think this is a bad spot to get in on that stock. All right, and then ARM's another one which I do like down in here. A lot of oversold stuff doesn't mean it's bouncing tomorrow. I think you just got to be patient and not jump in. All right, we can take a quick look at a few trades. We can look at the account today. I mean, we're down 65 points, so it's kind of an ugly day yet again. Here. We just can't seem, we're back down to the lows of the year, um, time where we were 2 days ago. So yesterday, kind of a weak little rally, and then the Bears pulled it back down off of its highs. So the rally just fizzled out yesterday. Today, it's just all negative. Things are just heading lower on the session. Uh, PPI is cooling. Is the market cooling? The economy cooling? Who knows? Just these tariff threats are just going to continue to just hammer us in here. And the worst things for me is my SPY positions. This is what's causing me all of my problems. None of them are in major trouble. It's just that they're all down, and I have a lot of them on because the market's just been selling off. So we're going to need to see, and the VIX is up again fractionally today. We're going to need to see some sort of bottoming here. But SPY is putting all of the pressure on my buying power, which is keeping me from trading a lot of other things. So it's a double-edged sword, good strategy. It's not great in a bear market here, which we're now in a bearish current, short-term market. Until this turns around, the buying power pressure from my SPY is going to kill me. The ES stuff, though, is in great shape. So ES is doing really, really well. ES trades are up. Here, I love these at the money trades. I would like to put more on. I'm just really strapped with buying power because of SPY and the market slowly selling off. The market sell-off is not affecting any of the ES or 112 trades right now. We did get stopped out of some, but really not putting a lot of pressure on us. Not BP, nothing in here. But these at the monies are in great shape. Yeah, it was up even more earlier today. Now it's selling off. We got 8 days to go. We're really, as long as we can stay above this 52.50, which I thought would be ridiculous to even get to. Well, now I mean, we're still up. We're in the picture. This trade, I'm really struggling with this trade, leaving it on or not. We got 8 days. There's a lot more to go on this particular trade. Okay, just making sure this is right. Okay, we're 1,200 bucks in the trap. We are dead set in the middle of this trap. We're nicely up now. Of the 1,200, we've already got 760 of that in. We're up 300 and some percent. I could take this off, but it's 500 more bucks. There's only 8 days to go. I mean, if we get 300 points more of sell-offs in 8 days, which is certainly possible, that's not going to be great for this trade. As long as we don't get down to this 52.50 by expiration, it's going to pay off nicely. The only thing here would be by closing this, do I free up buying power? Right now, I'll free up about $7,000 in buying power. I don't need to free anything up. I'm not in trouble. So I don't really see a need to do that. I would just like the market to stop going down but this thing is going to benefit from any kind of a slowdown in the drop. Naked puts of the 112 here, they're fine, nothing to do here. The put debit spreads are getting very interesting. This one here, certainly interesting. I've already adjusted this thing once on this FB trade. This was 300 wide at one point. I narrowed it to 200 wide, and it's still really, really profitable. If I look at the analysis on this trade, does it make sense? But if you're 200 wide on this thing, we're going to make pretty decent money. So 200 wide on this would pay off about $10,000 in this trap. And right now, Right now we're paying off around 7,000 on this thing. So 6,500 on this particular trade. So we've got another 2,000 to 3,000 left if the market keeps selling off. I don't want to give a lot of that up. I'm really torn. Do I close or do I roll again on this particular thing and maybe this time roll down? I don't know on it. We'll see what happens, but I'm going to leave it for now. And then some of these other put debit spreads, they're in such great shape here. I wouldn't, not against anybody closing these, but 13,000, I'm at three. I mean, if the market keeps selling off a little bit at a time, these go up. Question is, do you take some profits here or not? To me, on some of these, I would even look at possibly rolling this one up 50 points. So if I wanted to on here, how does it do this? Every time I click this roll, it doesn't, it gives me a problem. All right. So the roll on this thing, we'll look at the table here. If we wanted to roll this up 50 points, we're going to book 1,350 bucks. I'm sorry, not 1350. We're going to book $13.50 times three contracts times the 50 multiplier. So this roll is going to lock in almost $2,000 here and still leave us with a 50 wide if the market keeps going down. I think that's not a bad deal. So we're going to do that. We're going to roll this one as well. We're going to take almost $2,000 out of this put debit spread, okay? And we're going to keep it intact with 50 wide times three. So again, 50 wide times three is still a pretty good chunk of change. All right, so that's pretty good. I don't see any other that are really doing that well. They're doing fine. They're doing good, but I don't think I want to roll any of these at this point in time, except for some of these that I already touched. All fine. Nothing to do here. Plenty of room for us if we drop a little bit more. So I think those are good trades. Don't have to do anything. Bonds, these are fine. These strangles are doing just fine. Nothing to do on bonds. Oil, the buying power is killing me on these trades, but the trades are doing fine. So I don't have to do anything on either one of these trades. Yes, the strangle's down. I'm not that worried about it at this point in time. So nothing to do here. Can't really take them off. That's pretty much it. Nothing to do in this account. Again, if I didn't have a buying power restriction, I'm going to tell you that I'm just going to keep doing these at the money. You can do 50 wide, you can do 100 wide, you can do whatever you want. These at the monies are so nice right now. And we just put one on the other, or put one on the other day, but we were showing this the other day in here. And I love this graph too. If we start to even slowly move down into this 50, we're going to start making 40, 50 grand by closing out some of our trades if we continue to fall. So I really like the setup that I have. Okay, now if we fall, 600 points, it's not going to be helpful. But if we just keep the slow grind down towards expiration, and this has not been slow, so it's been a little bit accelerated, but I'm going to wrap it up with you guys here, but I'm going to show this one. All right, so this is a 50 wide. What I did on the last one was I made it more narrow. Okay, something like this. So it's a 25 wide. You're going to make 775 bucks in the trap, okay, which is 14% in 2 months. Okay, so if we decide to reverse and we move higher, we're going to book 14%. If we drop into this trap, we're going to make 2 grand on 5,400, which is about 37% in here, and we can go all the way down to about 4,700. I really like this trade. I just think these are so good right now that this is the trade that I want to be. This is what I want to be putting on. Size it however you want, but I just think these are really good trade opportunities in here right now. So this would be my probably my favorite of what I would want to do on ES. We already talked about this the other day. I don't want to keep regurgitating the same info, but if you're going through this, you could also look at the Jade Lizard. It's the same, and give yourself a little bit more room to the upside to make some cash. I think that's fine. Any questions before we wrap it up today? I know it's kind of similar stuff a bit, um, but the market's not giving us anything new. So I think bearish on ES, at the money 111s here. And I'm going to post this thing in. I think these are great. And I think putting them on here, if you have the buying power with the higher VIX in the front months right now being elevated, we get a 53 IVR on ES. It's never that high. Okay? This is the best time to be selling premium, in my opinion, if you're putting on the right strategies in case we continue to drop a bit. I think it's the best time to sell premium. You could do a Jade Lizard. You might not even have to go out 60 days. If you want to do like the 50 or 45s, you could look at stuff there too, and put on some sort of a Jade Lizard. I don't know. It's just not going to set up right at all. So that's not going to work. But you're going to have to go here. The more narrow you can go, the better off you're going to be. And I think this Jade Lizard here is so deep all the way down there to 4750. And you're right here. I mean, even if we go up, either way, you're going to make 1,600 bucks on this trade. I can't even fit it on the screen. Okay? But this trade, I think, works out really well. I like this trade almost better because we can make not much money in the trap. We won't have the same, or in the tail, we won't have the same tail profit uh, that we would normally. But I think this is in good shape. I like it because if we do get a bit of a bounce here in the next 60 days, we're fine. If we don't, we're going to be fine. You're just going to get not much. And if we rally, you're not going to make much. 100. This is still 6.5% up in the tail here. This is not bad. I think that's an opportunity. I think also if you're looking at um, oil trades in here, we talked about 112s, Jade Lizards, same type of setups here. I think you could do an at the money. Jade Lizards, this might be too. That low. I love my oil trade setups. I just wish I had more buying power on some things right now. All right, looks like we're gonna have to narrow this a fraction. Okay, so here you go on this with oil. You can make 210 in the tail, which is pretty nice. So, even 200 bucks on 29.23, it's almost 7% in the tail. Okay, and if we continue to drop into that mid 60s to upper 50s range, 710 bucks here on 29.23, okay, is 24%. I just think it's just this is such a good trade. Either this or a Jade Lizard. Either one of these I think works for you guys. All right. So there we go. A handful of ideas for you, depending on if you have the buying power. And I got to run here, but have you looked back, Chuck? Have you looked back where there were trade wars to see how far? I have not really done any of that. I don't know that this is the same as it was. So the last opportunity, the last trade war, I don't even know if it's a trade war necessarily, but the last time that we were going to do something along these lines was Ronald Reagan. So Reagan did it, okay, and it was a good move at the time. But here's the difference, because this is not the same president. Okay, I'm not being political here. I'm just telling you, Reagan did it. He increased tariffs reciprocal against all the other countries out there. I mean, again, this is not political, folks, but everybody in the world is screwing the US with tariffs. Everybody in Europe's got 20, 30, 40% tariffs on half the US goods. They don't bring in a lot of US goods, okay, because the tariffs are so bad. The US doesn't have any tariffs on any of those countries. Okay. So while I'm okay with it, I think it's the manner in which we're going about it right now. When Reagan did it, he did it with a smile. Okay. I've heard somebody say that today too. But Reagan it was all, hey, this is what I'm going to do. This is how we're going to do it. It wasn't, oh, we're going to slap 200% on because you went up 20. It'll all work out. But in the meantime, here, it's the uncertainty of what's happening that I think is the problem. It's just the news back and forth. It's the headlines that are every time Trump says something, the market freaks out. I don't know why the market's freaking out. Okay. Just let it play out. Okay. Play what you see. Okay. I don't think it's a reason to panic sell. I don't think we're driving to, the recession tomorrow. Okay. Are all these things going to, be great? Well, not if we got 50% tariffs on everybody and nobody wants to bring in US goods, then the US is going to do it. But yeah, I think, Jeff, too, that's the thing. There's no 24-hour news. There's no true social back then when Reagan was doing it and any of these other guys. So I just think you look at it, and I got to run because I've got another one. But how long do high vol periods last? Let's just take a look at that. Okay, so let's take a look at the chart, and I'm going to switch off of these and just let me go to this chart here, and let's look at VIX. Okay. Look at VIX spikes. So VIX spikes massively in December, okay, all the way up here to 27, okay, and then within 5 days, it's back to 14, okay. VIX spikes here, okay, up to 23, which is more than, we're more than that now. And then within 3 days, 4 days, it's back to 15. VIX spikes back here last August. Okay. Volmageddon, one of the worst spikes we've ever seen. Okay. But that was a quick spike up, not I mean, we had the slow move starting and then one event pushed it up. Okay. But if you look at this, within 7 days, we were back to 15. Okay. So maybe this time's different, but I really think within the next 4 to 5 days, most likely we're back down. There's very rarely these spikes. Now here's a good one back here a bit. Okay, here's somewhere we slowly just crept all the way up to 34. Okay, this one took a long time to come down. Okay, so I think this is an opportunity here. To see that if he has something like this, it's just building up over time. Okay, well, this one took 2 months to chill out back into the teens from the 30s. Okay, but normally these things are back within a week or so to some normal levels. However, maybe this is different this time. Maybe this is back in 22, which was our bear market, where we slowly held up and then we slowly sold back down. Is that going to be this year? It's possible. So it's possible this year is the bear market year, similar to 2022, and it's going to take VIX a long time to come back down. I think you just can't pinpoint it, um, and it's fine. I think you just got to, play the probabilities that it'll probably ease off a good amount, but I think it'll stay elevated until we get through most of the tariff talk. Okay, once the tariff talk is over, and that may not happen until the end of April, then I think we stay elevated. All right. On that note, I got to run. We'll see you guys. Hopefully this was helpful to you, and we'll get this posted in an hour or two. See you guys.